Hey everyone, welcome back to Corporate Decoder. Today we are diving into BioNexus Gene Lab Corp's latest filing, and let me tell you, it's a bit like a roller coaster, but instead of getting thrilled, we might get a bit confused. We will find out why the company decided to do something pretty drastic with their stock. This report is called an 8K, which is something companies file to tell investors about big changes happening fast. In this case, the big news is about a reverse stock split. That might sound complicated, but we will break it down. Basically, BioNexus decided to do a 1-for-10 reverse stock split. Think of it like this. Imagine you have 10 slices of pizza, and instead of having 10 small slices, you now have one big slice. The total amount of pizza is the same. In the stock market, this means the company takes every 10 shares you own and turns them into one share. This happened on April 7, 2025. Before the split, the company had close to 18 million shares of stock out there. After the split, they only had about 1.8 million shares. That's a big change. Now, what happens if you owned, say, 15 shares? After the split, you should have 1.5 shares, but companies can't really deal with half shares. So BioNexus paid people cash for those little bits of shares they couldn't give out. The price they used to calculate this payment was based on the average price of the stock over the 10 days before the split. So why did BioNexus do this reverse stock split? Well, it has to do with something called the Nasdaq is a stock exchange. Like the New York Stock Exchange, they have rules about how low a stock price can go. If a stock price stays too low for too long, the Nasdaq might kick the company off the exchange. BioN, step back and think about this. BioNexus is trying to avoid getting kicked off the Nasdaq. Reverse stock splits can sometimes be a warning sign. It might mean the company is struggling. In this case, it looks like BioNexus is hoping that a higher stock price will make them look more attractive to investors and give them more time to turn things around. It is very important to keep an eye on BioNexus and their financial results. Are they actually improving their business, or are they just trying to play a trick on the market by artificially raising the price? Time will tell. We need to look at sales, profits, and how well they are managing their money. Ultimately, a company's value is based on its ability to make money and grow over time. Reverse stock splits don't change that, so you should be careful. Alright, that's all for today's Corporate Decoder. If you found this helpful, please hit that like button, leave a comment, and subscribe for more breakdowns of complicated business stuff. Thanks for watching.